Hi everyone. In this example we are going to continue our conversation around cash flow from investing and cash flow from financing, and we are going to wrap up our comprehensive analysis about the hypothetical company ABC Inc. I started in the previous videos. So in this case we are going to look at cash flow from investing. We already accounted for loss of PP&E sale and gain from land sale by adjusting cash flow from operations. Now we are just going to record cash flow from these activities. So we received cash from sale of equipment for $4,000 as indicated in the additional information. And then there's a cash proceeds from land sale that was $30,000. Purchase of equipment, $48,000 cash. That is typically a negative cash outflow. When there is a cash outflow, it's negative. As a result, when we look at the total net cash is negative $14,000, which is a net cash outflow. It is healthy for companies, typically healthy for companies when they are investing into the business. The last piece is cash flow from financing. Now what we are going to do is we are going to look at issues of common stock. In Part E, we are told that they issue common stock for $45,000. Anytime you issue stock or buy stock back, or when you issue a bond, or when you make a long bond payment, those are considered under financing. Dividends are also considered under financing. They are paying for the long-term debt as indicated in Part C. So the long-term debt is going to decrease by $10,000. We could also see that in the balance sheet. If you look at the balance sheet, their long-term liabilities is decreasing from $25,000 to $15,000, but it's also nice to have it in the additional information. So that's a decrease, and it's going to decrease our cash. There's also dividends. They pay $5,000 in dividends, and we need to record that as such. And then we are going to take the total. Cash flow from financing is $30,000, so a positive means a total cash inflow. The last piece we are going to look at is practically total change in cash, which is going to be cash flow from operations. We are going to have cash flow from investing, and we are going to have cash flow from financing. And the sum of these three, for operations, investing, and financing, will give us the change in cash. And we know our beginning cash was $15,000 plus the change in cash. Beginning cash plus the change in cash is giving us $42,000. That's going to be a checkpoint for us to see if we made our calculations correctly. Ending cash is $42,000 according to our calculations, and that's what we have here, which means our calculations are correct. I hope that this video series is giving you a good insight in terms of how cash flow, statement of cash flow works from operations, investing, and financing standpoint.